For years, running a business in Mexico came with a comforting rule of thumb. If you had a stamped digital invoice, a CFDI, and a bank transfer to match it, you were safe. That digital file felt like a heavy steel vault door locking into place. Once you had the XML file, the accounting was considered solid. Business owners and executives could hand the paperwork over to their accountants and sleep soundly, trusting the tax authorities were satisfied. But there was a blind spot in that system. People figured out that you could buy a perfectly valid invoice for a service that never actually happened. The paperwork looked flawless, but the real-world work did not exist. Looking at this updated tax code for 2026, specifically this section right here, we see the new rule. It states that invoices must back up existing, true operations. The authorities no longer take the digital document at face value. They want proof that the service or product actually existed in the physical world. This puts the ball entirely in your court. From the exact moment you generate an invoice, it is now your job to prove you are innocent of faking it. A digital invoice by itself offers no protection anymore. Without undeniable physical evidence of the work, the document carries zero weight during an inspection. To enforce this, the government introduced Article 49-Bis. Forget what you know about traditional tax audits, which usually drag on for months or years. This is a surprise, lightning-fast inspection designed to verify if your business operations are real. The moment an inspector knocks on your door, your company's digital seals are suspended. There is no trial, no warning, and no grace period. Without those digital seals, your company is instantly paralyzed. You cannot legally issue an invoice, which means you cannot collect payments from your clients. Your entire cash flow freezes on the spot. Let's look at how this plays out on the timeline. The top track is the old way, plenty of time to respond. The bottom track is the new 49-Bis procedure. The whole process, starting with that red suspension marker, is squeezed into a maximum of 24 days. And right here is the most critical part. You have exactly 5 business days to present your defense. You have to prove what the law calls materialidad, the physical reality of your business. Handing them the invoice will not help. Proving materialidad means placing physical evidence, like signed business contracts, facility employee access logs, and detailed delivery reports. The math is no longer the main focus. The tax authorities are aggressively auditing your operational reality. So what happens if a company is paralyzed and cannot gather that mountain of physical evidence in 5 short days? Reading right here in the official document, the penalty is severe. The authorities will officially declare those invoices false. This creates general effects, meaning all the legal acts and transactions tied to your company are retroactively wiped out. Panning down to this next section, we see the ultimate administrative punishment. The government permanently cancels your ability to invoice. In the business world, this is a civil death. Worse, it opens the door to criminal repercussions, including mandatory pretrial detention. A simple failure to organize your paperwork escalates directly from a tax discrepancy into a criminal fraud investigation. Let's look at this network map to see the ripple effect. When your company fails the inspection, the ruling doesn't stop with you. It actively targets the clients you do business with. Because your invoices were declared false, your clients are suddenly holding invalid deductions. They have 30 days to pay the back taxes on those invoices, or their own ability to bill will be suspended. Failing this inspection sinks your own ship, triggers a criminal crisis, and drags your entire supply chain down with you. Let's be realistic. Trying to dig through a year's worth of emails, photos, and contracts in 5 days while your business operations are entirely frozen is humanly impossible. Because reacting in the moment is impossible, your only viable legal defense is absolute prevention. You have to be ready before the inspector ever knocks on your door. This is where the operational evidence folder comes in. Looking at this comparison, on the left we have the old standard, a single invoice. On the right, we have the new standard, a robust binder packed with photographs, signed contracts, employee ID badges, and physical deliverables for every single transaction. Executives need to implement a new golden rule immediately. From now on, no payment to any provider should ever be authorized unless a completed evidence folder is attached to it. This completely shifts the responsibility. The burden of proof no longer sits solely on the shoulders of the accounting department. General management and operations must step up and institutionalize this level of order daily.
Article 49-Bis serves as a stress test for your business organization. In 2026, while accounting provides the necessary records, operational evidence builds the legal wall that protects your business's legacy.